Hello, everybody, and welcome to the 43rd edition of LM's Weekly Lab, our weekly program to cover all the developments relating to the markets, whether it is the domestic markets as well as the international markets and the repercussions on the stock market performance of the different entities. First of all, we start off with the global markets. I think an important event to look forward to in this week was the Federal Reserve meeting, and we had the Federal Reserve meeting, and on expected lines, what was expected that there is going to be a 25 basis points hike that has come through. Now, more important from the market perspective was the outlook which was expected from the Federal Reserve, what they feel, whether the interest rate cycle will be reversed. The Federal Reserve has of course indicated that there's going to be a pause. It has hinted at a pause as far as the rates are concerned, but no clear-cut direction about what will happen as far as the rate cycle reversal. That means the fall in the rates will happen. So that is not going to happen anytime soon, and that has kind of made the markets a bit nervous. This is one factor. Apart from this, we had the geopolitical tensions which continue to impact the markets, and a combination of all these factors we have seen is that the world is staring at a recessionary kind of a scenario. So we've seen a fall in the crude oil prices. The crude oil prices have also corrected to near $75 a barrel, and with crude oil prices correcting to $75 a barrel, I think it augurs well for economies like India, of course, that the crude oil prices have cooled off a bit. So from an Indian perspective, I think limited impact as far as the global developments are concerned. And as far as the domestic markets are concerned, we had a pretty meaningful week as far as the equity market performance is concerned. So first of all, we start off with the beginning of the week where we had the auto sales numbers, and we had a kind of a subdued performance as far as the April month was concerned. Maruti, I think, impressed with a good set of numbers, but overall, if one were to look at the performance of the auto sector, especially the commentary which has come from FADA, which is the Federation of Automobile Dealers Association, they have indicated that they have adopted a cautious stance as far as the passenger vehicles are concerned and two-wheelers are concerned. This is because we had unseasonal rains as well as hailstorms prevailing in the different parts of the country, and that has impacted demand to a certain extent. So as far as auto is concerned, passenger vehicles have slowed down, and this is the first time in the last 8 months that there's been a degrowth as far as the passenger vehicle space is concerned. So a bit of caution as far as the auto sector is concerned, but not as far as the auto ancillary space is concerned. This week we clearly belong to the tire sector. We saw the tire sector stocks were in great form. We saw MRF very close to the 1 lakh mark again, and I think MRF reported a very strong set of numbers, a very stellar set of numbers. This is because they are having the best of all the worlds, whether it is the declining the natural rubber prices or the crude oil prices. At the same time, demand is making a comeback. We are seeing the replacement demand making a bounce back. Exports are also showing signs of revival. Replacement demand is making a comeback. So I think tire sector is in top form. We had very strong numbers from MRF and CEAT. Our weekender stock idea, JK Tire, it has achieved its target of 204 today. Apollo Tires hitting a 52-week high, and stocks like Goodyear also hitting a 52-week high. So I think tires continue to perform well, and apart from that, auto ancillary stocks also continue to perform well. Our focus remains on three stocks which we have been highlighting time and again. One is Mahindra CIE, which has reported a very strong set of numbers. The second is Sona Comstar, that is Sona BLW Precision Forgings. It's looking quite good at the moment. It's got a very strong order book, which is approximately 8 times its FY23 earnings. And the third is Sundaram Fasteners, which has reported a very strong set of numbers. So can focus on all these three stocks at least in the near term. Apart from this, overall auto ancillary space is looking quite good. We had subdued results from Bharat Forge, but they have given a good commentary as far as FY24 is concerned, because the product profile is going to change significantly. So that's the update on the auto sector. The second is the banking space. I think banking has done a lot of heavy lifting as far as the markets are concerned. So I think banks, private sector banks, all have posted a very strong set of numbers, whether it is HDFC Bank or whether it is ICICI Bank, Axis Bank, IndusInd Bank. All these have posted a very good set of numbers. Next in the batch is the NBFC space. In the NBFC space, we have Cholamandalam Finance, we have Mahindra and Mahindra Finance, AB Capital, L&T Finance Holdings. All these have posted very, very strong set of numbers. So I think the NBFC space has also been doing quite well. Now I think what remains to be monitored is the performance of the PSU banks. If the PSU banks are able to deliver a good set of performance, then I think the banking index will be an overall outperformer as far as this earnings season is concerned. Third is the capital goods space. I think ABB has reported very strong set of numbers. Company continues to grow from strength to strength, and I think we could see a positive rub-off on Siemens as well. Fourth is the cement sector. In the cement sector, we've had Ultratech, which has posted a good set of numbers. ACC Ambuja having declared their numbers. Dalmia Bharat going ahead on the cost leadership, and Sri Digvijay Cement has posted good set of numbers. Apart from this, we have Titan, which has declared its numbers. It's an impressive set of numbers from Titan. And Reliance Industries in the oil and gas has posted a decent set of numbers. We have FMCG sector, which has been largely quiet in trade, and I think today we'll complete the entire FMCG sector. Major earnings are likely to be completed today. We are expecting numbers from Britannia and Marico. Dabur and HUL have disappointed as far as the earnings were concerned, and Nestle has posted a strong set of numbers. As far as pharma is concerned, we've seen numbers from Cipla. So Cipla has declared a good set of numbers. And I think overall, if one were to look at the disappointments as far as this earnings season is concerned, then it's going to be the IT sector. The frontline IT companies have disappointed, whether it is TCS, Infosys, HCL Technologies, which has disappointed. And I think to a certain extent, we got some relief from Wipro Limited, which has posted a good set of numbers. And now coming to stock, those sectors which could be strong performers. The first is hotels. I think we are seeing a very big turnaround in the hotels, and the first number to analyze is the Indian Hotels Company Limited. This was a very meaningful year for Indian Hotels Company Limited, because while they achieved revenues of close to 5,500 crores, the cash profits, the net profit after tax was very, very meaningful, and they have in a way achieved a right balance of as far as the portfolio is concerned, their own portfolio as well as the management fees. So one portion is the having their owned properties as well as the leased properties, and the second portion is the management fee element. Now, out of the total earnings of more than 1,000 crores, 400 crores has come from the management fee contracts, and this is really increasing going forward. Indian Hotels has guided that they expect the demand to outpace the supply in the medium to long term. So I think that's a very big positive as far as the sector is concerned. And we are expecting that there are going to be certain triggers which are going to play an important role for the hotel sector. The first trigger is the G20, the second trigger is the World Cup, the third is the boost in the domestic tourism, and the fourth important factor is the religious pilgrimage tourism, which is also being boosted in the economy. So all this is going to impact the demand in a very, very positive way. So I think hotel sector is at a cusp of something really very big. Apart from Indian Hotels, we also saw very good numbers from Mahindra Holidays and Resorts Limited. So I think all this space is looking very, very exciting. Apart from this, we have the railways, which continues to do very well. We have Rail Vikas Nigam Limited, which has shown a massive jump, and even as we talk today, the stock was up around 10% in trade at 142. Apart from this, we saw good momentum in rides. We saw good momentum happening in IRCON, that is Indian Railway Construction Company, RailTel, All these stocks have been on a virtually on a tear. So I think the railway story continues to be very, very strong. And in between, we've seen good momentum in the defense counters as well. So no real dearth of opportunities as far as the markets are concerned. And as far as our weekender stocks are concerned, some of our stocks have achieved their targets. One is HBL Power Systems during this week, having achieved its target today. As we pointed out, JK Tire has achieved its target. Action Construction Equipment is very close to the target. So we have formed a conscious policy of recommending investors to book 50% of the profits and hold on to the remaining positions. It's important that as markets keep going up, to take the money from the table, to keep booking profits at regular intervals. Well, lots of things to discuss, but time constraints of course do not permit us to go beyond this, but do revert back to us with your feedback on our program. Thank you everybody, and we hope to catch you early next week. Thank you very much.